Hi there, and welcome to today's free informative session. My name is Ronaldo, and I'll be your presenter for today. I've been now training for the past 24 years, and I've been teaching novice or traders now for the past 18 years. I've traded all assets in terms of stocks, forex, futures, and options. And at the same time, also educate traders in regards to the 6 inches between our ears, which is the mindset or the psychology of trading. What I'll be sharing with you here today is simply how to manage and strategize your investments based on your money, based on whatever you may have right at this point in time. I believe it's very important to get educated and get informed that if things happen like this, what can you do summertime time in the future? Or maybe perhaps there's some form of opportunities, and what can also you do in regards to that when it comes to opportunities? The coronavirus have definitely created a lot of fear globally. And for the past 2 weeks, the markets have dropped 30% since its high. So the question now is, where to from here for you? So without further ado, I'm going to start my screen. You should be able to see my presentation in 3, 2, 1. And I am going to dictate and state the disclaimer right now. Please make sure, by the way, and know that trading may not be suitable for all investors. The high degree of leverage with foreign exchange, options, futures, and day trading stocks can work against you as well as for you. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment. Therefore, you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Remember that past performance is not necessarily indicative of future results. There have been no promises, guarantees, or warranties suggesting that any trading will result in a profit or will not result in a loss. The content of this program was created on and is owned in its entirety by Enlightened Super Trade Education. Any reproduction, copying, duplication, and distribution of these programs content without the express written consent of Enlightened Super Trade Education is strictly prohibited. Please make sure that what I'll be sharing with you here is based on my opinion alone, and that not be taken as a form of any form of advice. I'm just here to give you some form of information. So let's discuss in regards to the different types of investments that you're currently in, or maybe perhaps not even, that maybe perhaps it's also a good time for you to really have a look whether if it's a really good opportunity right now in regards to either minimizing your risk even further or as an opportunity to making money. Well, there are stocks, bonds, investment funds, bank products, options, annuities, retirement, savings for education, alternative and complex products, commodity futures, initial coin offerings and cryptocurrencies, security futures, and insurance based on finra.org. The financial markets is defined as a marketplace where financial assets are being created and traded, such as 1, stocks, 2, futures, 3, currencies, 4, options, and simply the financial market provides a platform to the buyers and sellers to meet for trading assets or price determined by demand and supply forces. Based on these different asset classes, a stock market is simply known as the secondary market. Is an organized marketplace where securities are traded between traders and investors, such as individuals or retail traders, institutions, stockbrokers, and fund managers. A good example would be this. Say if you're an employee of Microsoft, Microsoft will offer a 401k, and Microsoft goes via a third party where 401ks are currently being traded by Fidelity, for example, and Fidelity or fund managers, also as institutions, they will trade that. They will trade as part of your money and basically go through from there that if the market say drop, like right now, 30%, then technically your 401k is also down 30%. So the question now is, or depending actually on what they do with it, but at least for your 401k will also be down from here. So the question is, how could you minimize your risk and at the same time also take advantage by profiting from from the down market, okay, which are, I'm going to share with you some examples or strategies you can basically utilize. Futures market delivery or settlement of commodities takes place at a future specified date. Money market is a market where monetary assets such as commercial paper, certificate of deposits, treasury bills, etc., which mature within a year are traded is called money market. A market for short-term funds that is traded over a virtual network. Foreign exchange market, on the other hand, is a market where buyers and sellers are involved in the sale and purchase of foreign currencies. Last but not least, the option market is simply an option is a contract that allows but doesn't necessarily require an investor to buy or sell an underlying instrument like a security, ETF, or even index at a predetermined price over a certain period of time. Buying and selling options is done on the options market, which trades contracts between which trades contracts based on securities. Buying an option that allows you to buy shares at a later time is called a call option, whereas buying an option that allows you to sell shares at a later time is called a put option. So you must be wondering, why is it important for you to learn? Well, if most investments are in the financial markets, then is it important to know what's happening with your money? So you see on the bottom left right there is the chart of the Dow 30, and then the picture on the right is simply the amount of percentage it basically dropped during a particular day. That actually got taken basically this week. So the question is that if your investments are currently down, then what can you do to strategize it to minimize your risk? Well, here's an example of what you could potentially do, or we could potentially have done to strategize your investment. Say, for example, you own a Microsoft stock, and Microsoft stock currently, let me open up basically a chart right here so you can see. So Microsoft. Microsoft Corporation. Let me actually see if I can just find a better. Yeah, NASDAQ right there. Okay. Microsoft, the last, based on the highest price it's ever been, was $190.70. Yeah, it actually already showed here in terms of confirmation that this is going to drop. The high there was February 11th, so that was last month. There was a confirmation February 20th that this is actually going to fail. Of course, when you're going to learn this through our beginner course in regards to identifying basically entries. When you're identifying entries, there's certain trails that actually institutions will actually live or will leave in a chart, and you will learn about price. You learn about price action. And so if you took action basically from here, either number one, and by the way, here I said the highest price was at $190.70, and currently the price of $144.10. The low of today, which was the lowest it's ever been, basically for the year. So here it took 29.5, so 29 to almost 30% drop from February 11th all the way to March 17. So that's quite a drop right there. So for the past 24, 35 trading days, it's dropped 29.19%. So make it 30% to make it easier. Okay, so that is quite a big drop, $55, $56 drop right there based on $190 at one point. It's now $145. Okay, so if the market basically dropped that much in terms of the Dow, say the Dow here, so let's look at the US 30. So the Dow, currently it's up 2.2% as I'm doing this presentation. The last high was 13th of February. Actually, let me double check that. The high right there, 29,594. 594. Dated the 12th of February, all the way down to right there, 32. Oops. 32.89%. So Microsoft dropped 29.5, close to 30%. The Dow dropped the past 34 trading days, 32.89%. So that's quite a hefty drop. So if that happens, then what can you do since you own Microsoft? Because Microsoft is part of the Dow 30. Well, so notice here, we say 32%. What do you think happened with Microsoft? Yes, it dropped close to 30%. So what can we do to strategize it? Well, number one is buying a put option of the stock that you own. Number two, buy an ultra short Dow ETF called DXD. Number three, or short the ETF of the Dow, which is DIA. So let me share that with you based on the chart. So if you own Microsoft, what could you have done? What could you have done differently? Well, number one, if you know exactly and you can get out from your stock, but if you can get out, then the number one thing is to close that position, take your profit and basically run, especially when things are just too hot or too expensive. And if you know basically and you're educated, then you know exactly when to get out, then you still basically end up as a winner, right? So that being said, on the other hand, if you cannot get out and say you have a 401k and you want to protect it, or you work, say, for example, Microsoft, and you have Microsoft shares and you can't really take it out, then number one is to buy a put option. A put option is simply an option contract that you're not obligated to, by the way. It's simply you're thinking that Microsoft is going to drop sometime in the future. And by you buying an option that if it drops, then it will give you some form of premium. Say the premium is, say, $1. And by the time it drops, the premium increases now to $2. Then you basically just doubled your money. At the same time, if you can do some form of pre-calculated in terms of calculation, that if you're currently losing, say, in this particular case, you have, say, $1,000 and then you lost 30%, you lost $300 basically from there, and you only have $700 left. But if you bought, say, a put option on it, and part of that, if it goes the right way and you made $300, then you basically just broken even. Simply, you're just hedging your positions to minimize your risk. So that's one option. Number two, since the Dow is compromised with 30 companies and Microsoft is one of them, and now this one dropped 32%. And if you don't know how to trade basically the futures market, the other option is basically shorting basically now the YM. The YM is a code for the futures market, and it dropped 30%. Then hey, look, then you would have made money in regards to shorting, probably more than what you have lost in your stock. The other one is that if you don't like shorting, because some people doesn't like shorting, you can buy an ETF called DXD, which is Pro Shares Ultra Short Dow 30 ETF. ETFs simply are short for exchange traded funds. It's just a basket of companies, stocks that creates that. But since if your viewpoint is that it is going to fall, then you have to buy the ultra short Dow 30 ETF, code DXD. So here, 11th of 12th of February, that you don't feel comfortable, and all of a sudden you know that, or you're seeing that there's going to be some form of drop going to happen in the marketplace, because you know the whole macro fundamental component, and you're buying it just to hedge your position, hedge yourself. See here, if you say you bought it on approximately closing price there, 20.88, even say you bought it $21. So $21 now is $34.14. You've doubled more than your money, basically, right? So by you doing that, or actually not double, 50% or more, because currently from 20 it reached 38, yeah, almost 40, like 70, 80%, right? um Almost doubling your money. Then definitely by you hedging your position, then awesome. So that's one in terms of the Dow, ultra short right there. And then moving on forward from there was the third one. We stated the third one is also shorting the Dow Jones. And it's another ETF. So DIA, if you are into the stock market, so there's an ETF called the Dow DIA. That's a spider based on the Dow Jones Industrial ETF. That if here right there is currently 294, the highest what there was 295.85, and confirmation basically happened here. Say the closing price 292.78, 292.78 to 211. That's a 81 point drop. So an 81 point drop. So you're getting through here. You just simply gained 31.69%, or from the current closing price, 27.87%. So this strategy is simply as a form of hedging with the current investments that you currently have. So by you knowing to manage your own money, imagine if you now have that knowledge, like, and you learn how to trade, say, even a year ago, 2 or 3 years ago, they would have minimized basically your risk. Actually, I've posted quite a few about that for the past 3 years about how you can basically manage your own portfolio. I guess, with the markets being so strong, it's just a matter just of time that it has to correct. But we never saw in regards to the magnitude of it dropping rapidly, really, really quickly, right? There's a lot of volatility in there. At the end of the day, we're still in an uptrend, whether you like it or not. I believe there's going to be some form of opportunities to the upside. So that being said, if there's going to be an opportunity to the upside and you're down, so what can you do simply as a trader? Well, number one, what you could also utilize is simply currently slowly buying back. See, now it's up 8.26%. So by buying from, say, depending on where you bought it at, if you bought it at 187, 190, then definitely you're down 30%. And now since the market is still very bullish, if that was me, I will average it by buying more, being in a better price point. Because if you're buying over there based on low supply and demand, it's too expensive. And you're buying at supply, then your risk might be small. Well, actually, I beg your pardon, your risk is huge, because if you're buying at supply, you're buying at a higher price. And then imagine now your risk, depending on where it's at, right there, right? So if you put your risk, say even here, $184.71, and say for argument's sake, you bought it at 187, that's a $3 drop, 84, 56, 87. Yeah, $3 drop right there. So that's a big risk. Now, if you're shorting, say at $187, and the high right there was 190, it's actually less than $3. So there's lesser risk when you are selling at a supply level rather than buying at supply. Does it make sense? So if you short it there, then look, who would have thought in terms of that magnitude that it's also going to drop? On the other hand, say for argument's sake, you made a mistake and you bought it right there because it's hot. Now that the market is simply tanked and corrected itself on a bigger scale of things, in this particular case, it corrected from the last high. Let me just find the tool here. 1, 2, 3. So from the major high, it corrected 62 or 78.6%. Currently, the price sitting at 62%. Right. So part of that correction, since Microsoft is in an uptrend, whether we like it or not, then the odds probability of the price of Microsoft to head back to the upside is highly probable. So the law of averaging will work in this particular case because you are with the trend. So this is a strategy that I would implement, that if you also have the opportunity to learn, which we do offer, then you'll get, or you'll learn as part of that. A normal strategy would be to average it just in case that now it's simply to minimize the risk and also to maximize the gain, right? So that's one strategy you can implement. Number two, if you don't want to spend a lot of money, then you know what, you can buy a call option, for example. So by you buying a call option with that will also protect whatever you now have in regards to that. If it continues to either go up, then you're going to have some form of good profits right there. So also knowing, though, in terms of calculation, how much position size you're going to enter. So by you buying a cheaper price, which is at the current demand, you have a high probability. And for me, then this is where I'm going to have a law of a rule that if once they have these parameters, then I'm going to buy more than anything. Okay, so there are certain rules, but if you're going to learn with us, you definitely know all these rules. Certain rules of the methodology, rules of the strategy, in conjunction, in addition to your own set of rules. All right, so that's Microsoft with you right there. So buying, averaging, buying Microsoft, buying a call option will be also an ideal component. Also knowing, of course, options could be very complex. But finding out all these asset classes or knowing these asset classes will take place as you progress in regard to learning in terms of your journey in learning trading. All right, moving forward basically from there. So what are the major concerns about learning the financial markets? Well, here are certain key questions that I get asked quite a lot. So rather than me emailing actually to people already I've asked, and if you're listening to this, then this is awesome. First one is, why is it important for me to learn to manage my own investments? I believe it is very important because if you are more informed and you know what to do, then you will create different strategies to hedge your positions, especially with portfolios that you can't really touch except for institutions alone. Two, how do you know which one is the right asset class for me as a beginner in terms of learning? So since I dictated the different types from stocks, forex, options, and futures, in my opinion, I believe the easiest in regards to learning is trading the forex market or the foreign exchange market, because it has a lot of advantages compared to its brothers like stocks, futures, and options. And I've explained to you why, basically in the course right there, why it's better. Number one, it's highly liquid. Number two, there's some form of volatility involved. Three, you can control the risk at any time. When I say anytime, definitely anytime, because it's 24 hours, 5 days a week. Now, when you're trading and you're a beginner and you're learning how to trade stocks at the very beginning, it can be very expensive. What do you mean? Well, if you're going to trade more than 3 times a day, after learning either on your own, which is a bad mistake in my opinion, or learning the proper way, learning it from someone else. And if you are trading stocks, especially here in the US, you need a minimum of 25,000. Not everybody will have 25,000. So imagine if you made one mistake, and then now you know you lost 10 grand, 15 grand, then it's a very expensive learning environment. So by trading forex, on the other hand, you can open it from as little as $20, $50, but I never tell students to go beyond $500 because I know for a fact they're going to make a lot of mistakes at the very beginning. I believe these mistakes are part of the integral part of the learning process, because if you make mistakes at the very beginning, then awesome, because you can correct either the technique or two on the mental side of it. Okay, so how can I learn it? You can learn it via e-learning. So if you're very busy with your work, or you are a full-time parent, then yeah, definitely I totally understand. It's going to be challenging. However, now we have created online courses that you can learn by yourself, that you can learn at any time, either your phone, using the use of your phone or your computer. So we're offering this free beginner course and 30-day free support, because when you're also learning online, it's very important to have a support system. I believe it's a bad mistake by learning it by yourself, because you only see 180 degrees that's in front of you, and you only see 180 degrees that's in front of you, then you're going to create some form of bad habits. By having coaches, on the other hand, and that if you are analyzing something and you place a trade and you made a mistake, then so what if you made a mistake? It's awesome that you made a mistake, because it's also where we can see fit on how we could improve your trading style based on your technical analysis and your skill set. Okay. Where can I learn it? You can learn it from your home, from your computer, from your phone. So it's an e-learning based. And once again, like I said, the support is live on the other hand, based on our time zones. And we look at the markets on a daily basis. And when you are in the support, then we are going to see whether you did things correctly, whatever questions you may have. So support is almost basically unlimited. Is it hard to learn? In my opinion, it's not. It's only hard if you say it's hard. And if you're a type of person who is very well focused and this is something you want, then in my opinion, there's really nothing to think about, because in my opinion, I believe it's an important element to really be informed, especially with this type of troubles that we're currently at based on the coronavirus. Do I have time to, do I have to learn it, all of them? Do I have to learn all of them? As you progress in your learning, you're going to learn all of them. And it is important to know and learn the whole global economy in regards to its relationships. Because if you can utilize that, then it doesn't really matter what you trade, to be honest, because everything's all about price. But at the end of the day, they are all connected. The whole global economy is connected. Based on my experience, on the other hand, which one's the easiest to learn? Currencies, and then in conjunction with the futures market, and from there, the stock market and the options market. So if you just to fully really understand things, since options are mainly a derivative of the asset class, so if you have stocks, Forex, and you have futures, they will have a derivative of every asset class, and they call it options. So for me, options, on the other hand, I believe is the most challenging one, because you have almost 200 different type of trading strategies. And not only that, you need to also have some form of money, depending on the strategy that you implement. But that options are a really good vehicle for trading, because you can create different strategies to either hedge or arbitrage basically your trades. Moving forward from there, is it really easy to make money from trading? At the very beginning, I'm not gonna lie, it's challenging. You need a lot of time and effort and money to be successful at it, whether you like it or not. However, if you learn the right way, then your investment, your educational investment won't be that expensive compared to if you're doing it by yourself. Okay, that's my honest opinion. And then from there through the progression, at the beginning, you're not going to make any money. You'll see money, make money, you lose money. You'll make money, you lose money. But the key is the consistency. And then it gets easier each time as time passes, the amount of effort and time that you put in. But there are no guarantees. So at the end of the day, it's really easy. The question is what makes it challenging. So there's the word but. What makes it challenging is the 6 inches between our ears and how to control our internal emotions, especially the negative ones. That's the most challenging part, to be honest. And what are the risks involved? Well, to be honest with you, there is no risks right at this point in time because if you're going to take action, you simply got to do is just register through email us, and all you got to do is simply take action and just register to take advantage of the free beginner course that you will be receiving with 3 days of full support. So that's basically what I'm offering with you or for you. So there are no risks. The major risk, actually, if you really think about it, what really involves is that if you're not well informed, if you're going to keep more losing in regards to your investments or your portfolio, that's the risk involved for you. So that being said, all you have to do is simply email us at esdtraders@gmail.com to claim your free beginner course with your 30 days free support. And once again, it's an online course. There's no risk to you, but in actual fact, helping you and assisting you to get more well-informed, basically. Okay, so I hope that you learned something from today. I believe there is some form of awesome information there. Take advantage of it. And all you got to do, once again, email me, esdtraders@gmail.com, and get started. All right, guys, that's it for me, and take care till next time. I will see you on the next session. Alrighty, happy trading, guys. Take care until next time. Take care.